Hey folks, this is Big Mike Zlatnik, and this is just a short video reflecting on 2024 investment returns. We'll just cover a few different asset classes and the numbers. And also wanted to announce we have a webinar coming up on January 10th to have first outlook at the great deeply discounted new deals that we expect to see in 2025. So actually working on a live deal. It's a phenomenal deal. If you want to learn more, I'll have more information in this presentation in just a few minutes later, so stay tuned. Appreciate your time and attention. I'm recording this right before the New Year's on December 31st, 2024. So wishing you and your family happy and healthy and prosperous 2025. So let's jump straight into a couple of very short slides. Hopefully it won't take too long. So we're going to reflect on 2024 investment returns. Let's talk a little bit about different asset classes and how things have performed during 2024. If you look at gold, now I'm going to talk about gold as precious metals in general. Other precious metals have done well. It's just a high-level reflection. Gold has had a spectacular year with returns from the beginning of the year till now of approximately 28%. Now the gold was even higher. Now it came down a little bit, but it was absolutely phenomenal year for precious metals. S&P 500 has done also incredibly well with returns approaching 25%, 24.7 and approximately. Market is still fluctuating as I'm recording it, but these numbers are pretty close. NASDAQ, more technology-driven market, has done even better. It's up 32%. These numbers are just staggering, huge. And then if you go look at the crypto, specifically using Bitcoin as an example, the numbers are off the chart. Bitcoin more than doubled. Its annual return of approximately 123% is absolutely mind-blowing. Now, I'm saying all this with a huge degree of caution. Past results, as you know, don't reflect future performance, don't indicate future performance, and not indicative of future performance. Folks should be very, very careful looking at these great return numbers. In fact, there's a concept called reversion to the mean. When things come up heavily in some asset classes, reversion to the mean generally means that there may be a significant correction, maybe even recession or asset recession or asset correction. So just be very mindful that great numbers of the past don't always, and often they don't indicate the future. In fact, maybe a driver of contrarian thinking to consider things that have not done well, and some of those asset classes may be due for a correction. Now let's talk a little bit about the 10-year Treasury yield. Why 10-year Treasury? Why not 2 years? Why not 5? There's nothing wrong with those numbers, with those measurements either. But 10-year Treasury yield is commonly what drives mortgage rates in residential and commercial real estate industry. Commercial also uses 5 and 10-year Treasury yields that drive mortgage prices. In residential, it's heavily tied to the 10-year Treasury yield. And since the beginning of the year, Treasury yield has gone up. And it had a lot of volatility. The yield fluctuated quite a bit on a 10-year Treasury, starting at around 3.86% at the beginning of 24, and then finishing the year around 4.53%. And on the way went up to 4.7 and came down to 3.65% and then came back up to 4.53%. All on the inflation expectation volatility. So as we have seen, obviously, from a politics perspective, from the election perspective, Trump won the White House, Republicans also won the House of Representatives and the Senate. As a result, Trump should be able to move a lot of agenda. And it's been concerns about tariffs and other drivers of forward inflation expectation. So 10-year Treasury yield has come up. This resulted in actually losses if you're an investor in long-term treasuries. 10-year treasury is one of the long-term treasuries. There's also obviously 30-year treasury. Just using it as an example, publicly traded ETF, VGLT, and it's approximately lost 9.5% in 2024. Its price depreciated, it fell as a result of the rising yield. So for those folks who thought that the treasuries just give you the yield, well, short duration, very short duration, 3-6 months treasuries usually they don't fluctuate a lot in value, but long duration treasuries can lose value when the interest rates rise. Something to keep in mind. Now, I also look at the ticker USRT. It's a REIT ETF that reflects US-based ETFs. And again, these are real estate. This is a real estate investment trusts ETF. And it has a return investors approximately 5.7% based on the price appreciation. I'm not computing in dividends in this calculation. This is just the price from the beginning of the year to the end of the year. I generated a return 5.7%. There's been some distribution yield, and forgive me, I didn't capture this information. There's some yield. Usually the yield on these type of ETFs is not very high. It's somewhere in the, let's call it 3% range, plus minus. So actual return may be somewhat higher because of the distributions. And just for comparison's sake, I also picked Tempo Income Fund, trailing 12 months through the end of Q3. We're just about to finish Q3 financials. And then the Class A returns for the fund for the trailing 12 months are 12.63% approximately. So that just gives you a comparison. Some things have done phenomenally well. Can they revert to the mean? Can they come down? Your guess is as good as mine, but something to keep in mind. Tempo Income Fund is a lot more steady eddy. REITs and pretty much all publicly traded securities have significantly higher volatility because the price goes up and down. With private funds like Tempo Income Fund, volatility is significantly lower as there's no market, there's no publicly traded units. It's just a fund that reflects returns based on a strategy and performance. And now what's going to happen in 2025? Well, before I do that, let me just reflect on what we've seen in the commercial real estate, which is our area of expertise. We've seen a year of investments in mezzanine debt and a year of investments or considerations to invest in deeply discounted distressed deals. So the transaction volume in 2024 has been slow. 2023 was slow. 2024 was slow as well. The only things that really transacted, with obviously some exceptions, were just discounted deals, distressed deals, where the buyers were basically looking for bargains and the sellers were the sellers that had to sell. Now, we've seen some deals outside of that broader description, but the volume of non-distressed deals relative to distressed deals has been relatively small. So distressed deals are those that had to transact, either under pressure from the bank not getting paid, forcing the foreclosure or for sale, or other situations where the sellers had to act. And we've seen, especially recently, a ton of new buyers came out, started to look for bargains, which is really good news from the bottom of the market formation in commercial real estate. Typically, you want to see folks looking for bargains. That creates additional demand that can create activity in the future. So we expect transaction volume to start picking up in 2025. And we expect some recovery to take place in 2025. So we do have a webinar coming up about great new deals for 2025. And you can take a first look at the brand new deal that we have coming up. It's a deeply discounted purchase from a motivated distressed seller that had to essentially sell a property. And we're working with a partner that we've done a lot of deals with, and you're going to see what a strong deal looks like today, starting from January. So that deal is in the works. It's coming up in late January, but we'll talk about the deal on January 10th. So tune in. The way you can register is here's a LinkedIn code. You can go on LinkedIn, search for Tampa Family Funds and Syndications. You're going to see our posts. You're going to be able to join the webinar once you register. But reflecting back on 2024, it's really been only two types of activities: recovery capital in the form of mezzanine debt and preferred equity, which we've done quite a bit in 2024. We see that continuing into 2025. And then we also see brand new investment opportunities, deep buys with strong cash flow, strong tax benefits, assuming Trump will renew 2017 Jobs Act and 100% bonus depreciation. Of course, that's subject to future legislation. It's unknown, but we're all certainly looking forward to that. It is expected to pass the Congress. It's supposed to be an early legislative agenda. And then we'll also talk about the deep buy, what the returns could look like, what the cash flows could look like from day one, what downside protection, what upside, all that stuff we'll talk about at the webinar on January 10th. So please take this opportunity to tune in, and I appreciate your time and attention. Wishing you and your family wonderful 2025. Happy and healthy New Year, and until the next time. Thank you so much.